All right, hello everybody. This is Wes, and you are joining us here at the Trader Continuum live broadcast. Today I'm being left pretty much to myself. We'll be talking about some robot stuff. We'll be talking about some Forex trades that are coming up. Hopefully you can hear me. Hopefully you will be able to see my screen here coming up shortly. So I'll be running everything as we're doing this. So if you could bear with me just through some of this, is perhaps a few things that may end up having to be tidied as we go along. So for right now, let me get signed into my TradingView account. That way we can see what all is happening. Okay. Let me exit out of that. As I was logging into my TradingView account just a little bit ago, it actually ended up booting me from my TradingView account, telling me that I tried to log in too many times unsuccessfully. And it's still telling me that on this computer. So I'm just going to use Windows Computer for today, which is awesome anyways. All right, let me bring up some charts that we need to be looking at in order for this to actually work. Take that down, and let me refresh. Yes, bring that back up. All right, I think we are actually, for once, good to go. All right, so today we're going to be talking about a brand new trading system. I sent out some screenshots of this robot that I built that utilizes that trading system. And today we're going to be looking at how that robot works and how it performs, and we're also going to be looking at the indicator that I used to build the robot, and that's all based on TradingView.com. The reason why it's not on MetaTrader this time is A, this system will also work on stocks, but B, it is actually considerably more difficult to program this particular indicator into MetaTrader 4. And there's several reasons for that. I tried programming it into MetaTrader 4, but it's going to take a lot longer than what I've got in order to match those settings up. So there may be a version of this robot coming out for MetaTrader 4 in the near future, but for right now, it's on TradingView.com, and it is going to be made accessible to all of our Trader Continuum and Robot Continuum members over the next couple of weeks. So let's go ahead and take a look at this robot, and for that we'll need to switch over to my chart. Okay, so on MetaTrader 4, let me I'm going to stick with the US dollar Swiss franc, and let me bring up the My Scripts section, and we want the directional bias bot. All right, so far this doesn't look very promising, but that's just because the settings are defaulted to some settings that are not actually functional. So if we look inside of, and this is something else that I wanted to talk about during this particular program, some of the aspects of TradingView's backtesting program that have to be fixed. And not really necessarily fixed, I suppose, but they have to be changed around in order to have the proper backtest that we're looking for. First of all, I don't pyramid. Second of all, we want to recalculate the order size after order filled. Now the reason for this is, let me go back into, well actually let me choose US dollars. So we're looking at US dollars here. There we go. Yeah, that looks just about right. Okay, now the reason for this, if we look at the list of trades, all of them are 10,000 contracts. Now in Forex, this 10,000 contracts equals one mini lot. One mini lot is just about $1 per pip. Now that's not exactly the amount. It depends on the currency pair that you're using and all that cool stuff. But for the sake of what we're talking about, we will just say 10,000 units or 10,000 contracts is actually one mini lot. So anyways, if you are using this recalculate on every tick, or actually if you're not using either of these, then what it does is it actually multiplies this trade size. So you see that we've got a 30 and a 40, a 50, 60, and then back down to 10. And yeah, sure, some of these gains are huge, $2,099 on that one. But the overall results, if we're doing it that way, look like this, which is pretty terrible. We do want to increase our trade size, of course, but we want to increase our trade size as our account size is increased. So as our account balance goes up, we increase our trade size. Not based, we don't increase the trade size based on how many trades are being placed or how many winners there are or anything like that. So we recalculate after order filled. Anyways, this is the screenshot that I sent, I believe, on Monday, which is showing how this trading system performs over time. Now these trades go all the way back to 2002. Why does it go back to 2002? I'm not really sure. I don't think I can get it to go back any further than that, actually. So we'll leave it at that. Now we are using the daily time frame for this. A lot of the robots that I've been building lately have been based on the daily time frame. And that's because, well, I mean, for one, it's a little bit easier to build a system based around daily, even though it does mean that sometimes you go weeks without a trade. But as you can see from our tester, that's strategy tester, go to overview. Now what we're showing here is only a 19% gain, but that's because our account size started at $100,000. I always start my backtesting with a $10,000 trading account. In that case, we have a 5% max drawdown, which actually we would call a 13% drawdown because it's a $1,300 drawdown. And if that was the very first set of trades that we placed, that we got stuck in this drawdown with, then it would be a 13% of a $10,000 trading account. Now, at the end of the 16 years, I suppose, is what we're looking at for this time frame, we made $19,418. So that's a almost 200% increase over a 16-year period of time. So if we're looking at a 16-year period of time divided by 200%, and we're looking at about 8% per year. No, wait, 200% divided by 16 years. There we go, 12.5% per year. That's pretty cool. And at a 13% drawdown, that's not bad. And that's just on one currency pair. So now if we switch over to another currency pair, which obviously a 66% drawdown is not ideal. And we need to change some of these settings around because the Euro US dollar doesn't perform the same way that the US dollar Swiss franc does. Now, in a previous broadcast, we had talked a little bit about this, where I said that if you change one setting or two settings very minorly, and then all of a sudden your entire system starts to work out way better, then that's not a very proper way of backtesting. Now, granted, this is over the past 16 years, but the fact still remains that I only changed one thing, the model period. I reduced it by half, so I went from 4 to 2. I only changed one thing really quickly, and it created a much better equity curve. So that's not really all that trustworthy. So we have to change some other things as well. We can't just stick with changing one little thing to make an entirely huge, massive difference. Otherwise, it's just not proper. So why don't we change a trailing stop activate to 50, which didn't change the drawdown. Our profit went way up, 312% now. But our drawdown is still 20%. And I don't know about you, but I don't really like the idea of having a 20% drawdown on a trading system. So let's change our stop. You know what? Let's change our profit pips to something like 300. Okay, well, the drawdown went down very slightly. Not even, that's a negligible amount. Like maybe 1%. So why don't we reduce the drawdown just a little bit further, or the profit pips down just a little bit further. And the drawdown is still the same. Figures. So let's take our stop loss up. Now the drawdown has decreased to 14%, and our profit actually went up to 343%. Wow, that's kind of cool. Let's change our trailing stop activation to I don't know, 100 pips, which that didn't change our drawdown any. And that's what we're looking to do right now, is change this drawdown. This drawdown is at 14%, and I'd rather have that drawdown lower. We're already looking at a 317% net profit. So what we would rather see is a little bit less profit, but a much lower drawdown. And granted, yeah, we all like having a lot of profit, but at the same time, a 14.5% drawdown just hurts. So let's keep changing a few things here. Let's change the trailing stop to 100, which that still didn't change the max drawdown, but it did take our net profit down. So let's take our trailing stop back up. And maybe, let's see, what if we increased our stop pips to 150 instead? Nope, that's not working. All right, 100. I think that's just about as good as we can get this particular test at a 14.5% drawdown over the course of 16 years and a 343% gain. So I'd say that's pretty good. Let's see, 16 years. Let's see, we want 343% divided by 16 years, and we've got a 21.5% per year. And you know, we could even just shrink that down to 20% per year. And if we add that onto this, we got 32.5% per year, which is pretty cool, to me at least. I don't know if it's cool to you, but it's cool to me. Now, if we decide to mess around with our lot size, for instance, since our position size right now is only 1 mini lot, what if we change that to 2 mini lots? Theoretically, what that should do is it should double our drawdown, which it did, and it would double our net profit. So now we have a 30% drawdown and a 687% profit over 16 years. And we have an average number of 2 bars per trade. So once a trade is placed, it's saying that it should close out within 2 bars. See his list of trades. So we have a $2 profit. Whoa, let's calm down here. $2. And then a $7 profit. Oh man, we're getting really big here. $200 loss, that one hurt. $22 profit, $13 profit, $375, $117, $400, a couple of 200s. And what does that take our balance down to? Oh, we don't have that little tab over here. Then we have a series of winners and then a series of losers. And the reason why these losers are smaller than this loser is that our trailing stop kicked in and we ended up drawing down on these particular trades. So we exited, but we didn't exit at the full loss. So we had a few losses, have a few gains, and We're not going to look at all these trades because there's like 900 trades over the course of 16 years. But in the end, we ended up working it out, so that's cool. All right, let me go back to the overview. Now, how does this system actually work? How does this trading system work? How does this indicator work? How does it look, etc.? I'm going to take all of these trades off of the chart because it's a little bit inundated, and that's a lot better looking. Let's go ahead and add this indicator to the chart. We want the directional bias. The way that I set this robot up, I set it up to be as simple as possible. Basically, this directional bias indicator crosses below 0, it sells. Crosses above 0, it buys. Right? Now, this particular area right here does not look all that appealing because we have a sell trade right here on this big buy candle right here, and that kind of sucks. But then if we move forward just a little bit, we have a buy right here, which seems like it's kind of missing out on the, missing the mark a little bit, but then we have this nice successive move upward. Now, if another trade opens up in the opposite direction, it will actually close out that initial trade. So we go up, and if we haven't taken profit yet, and we go back down, a sell trade would actually technically be initiated here, and it would close out of that buy trade, which again, looks like we kind of missed the mark a little bit on this one. But if you look at this over the course of a longer period of time, placing a sell trade here to catch a very large sell movement down is actually not so bad. Now, this is a pretty noisy indicator down here at the bottom when we have it set to 4. So on a discretionary type system, what we'd be looking for is something more like a model period of 14. That way we cut out some of the noise. Now, on a robotic trading system, this doesn't work as well. The 14 does not work as well. And that's because the robot is looking for trades all the time. So it's not distinguishing between when the market is trending upward. So when you and I look at this, we see a move up, obviously, right? And we have other indicators that we use. We have support and resistance that we might be using. We have other things that we look at. So it's not just as simple as, well, this just crossed above 0, so I'm going to buy, although it could be used that way. We also have varying profit targets, whereas the robot is only looking for one specific profit target. And in this case, it's looking for, let me just calm down. I need to calm down with the whole moving the charts around thing. I apologize for that. Okay. When we're using this as a discretionary system, we have varying profit targets. So we may see a move upward. We may get in here and then, it comes down, but we don't actually see it break down below the bottom that had been created previously, so we just stay in the trade. And then it breaks back above, and so we get a little bit more confident. Our buy trade comes back down, but still doesn't break down below this low. And then we continue with our buy trade. And then it breaks down below this, but only for a couple of candles. We stay in our buy trade and just continue moving upward. Or alternatively, we see that we've been in this big sell position for a little while, and finally we cross above 0, so we buy right here, and then we just stick around inside this trade for a little while until we start to see it go back down. There are just too many ways you can use an indicator like this along with other indicators and along with other trading systems to say that a robot should use the exact same settings as you should use in a discretionary system. The robot uses a modeling period of 4 or a modeling period of 2. We're going to put it on a 4 though, so it's a little bit less noisy. There we go. So when we have a modeling period of 4, you and I don't want to sit here every day and see new opportunities open up for trading and then try and determine smaller term profit targets and stop losses, which is why the robot uses the 4 directional bias modeling period, and it gets out a little bit earlier, but it gets out at a hard stop loss or a hard profit target, and it combines a trailing stop just to make sure that we don't lose some of the profit that we start to make. Now, usually I don't use a trailing stop. I don't really like trailing stops. They're not very effective when you're using them on an intraday day trading system. However, a trailing stop used on a daily trading system, a trading system you'd use on a daily chart, a trailing stop, wow. A trailing stop is a lot more effective when you're using it on a much larger time frame chart, because the movement is less, I don't know, noisy and staticky. Whereas with an intraday or a day trading system, when you have a trailing stop set up, then you'll see the market turn back around and hit your trailing stop just to turn back up again. Whereas on a larger time frame chart, you can set that trailing stop a little bit further away and be a little bit more confident that it's going to work out and that trailing stop will get you out if the market starts to turn around. So for instance, if we were to have placed a buy trade here, which there would have been a signal here to place a buy trade, then you may have had a few days of profit right here, not very much profit obviously. Probably only, gosh, what, 20 pips maybe? And then you would have started to turn back around. So a trailing stop could have helped you to stay out of, I don't know, the danger zone. So if you had like a 200 pip stop loss, which this robot uses a 100 pip stop loss on the initial trade. So if you have a 100 pip stop loss, but you have a trailing stop, as it goes up into profit, it means that your trailing stop is also following behind and you don't lose quite as much money when it turns back around. So when the market turns back around, this sell signal actually tells the robot to exit that buy trade, and it will exit that buy trade at a loss if it hasn't hit the loss yet, and then it will place a trade in the opposite direction. So it would have placed a sell trade and then followed this leg all the way down because we haven't had a buy signal yet to counter that sell signal. So yeah, sometimes you enter into some trades and you get into a series of losses, maybe 1 or 2 or 3 losses in a row, but then you end up getting that really nice trending setup that gets you into a nice trade. So buying down here, for instance, and then this gets you out up here, which may not seem like much, but then you also get right back into a buy trade, and then you get out of it again, and you get back into the buy trade, and then you just stay in that buy trade all the way up to here. I like using daily charts. I didn't think that I would like using daily charts, but I ended up liking using daily charts after all. All right. And since I'm controlling this entire thing, since it's just me here by myself, you're not going to see me a whole lot because I have to control the camera and everything else, the camera angles and all that cool stuff. So you may end up just seeing mostly my chart throughout most of this presentation. So I apologize if you don't get to see my face, or if you don't like seeing my face, then congratulations, you don't have to see it that much this particular time around. So now we're going to go ahead and take a look at some trades that are coming up, especially the British pound US dollar that we've been talking about for quite a while now. Now there's hopefully a potential divergent setup coming up on the British pound US dollar, and we're waiting for that to set up completely. And we're also going to look at the Euro US dollar and the New Zealand dollar US dollar. So let's go ahead and switch back over to the charts really quick, and we'll take a look at those, and then we'll probably end up wrapping this up after only about half an hour or so, since we don't have anyone else here to talk about other cool stuff. Now, if you want to chat, if you want to send in questions, you are more than welcome to send in your questions or send in anything you'd like. The little chat blurb bubble thing is right there on the window that you're watching this from, or at least hopefully it is. And you can just chat. You can use a guest chat function or whatever you want. You can make your name, I don't know, bubbly man or whatever. Let's just go ahead and move on to the charts before I get to rambling too much. All right. Back at the charts, I'm going to pull up VantagePoint. I like using VantagePoint for finding divergence setups. Now, the divergence itself should not be used as its own standalone system. Divergence should be used in conjunction with your own technical analysis, your own fundamental analysis, whatever it is that you use regularly in your own trading. Divergence is a good way to spot market reversals, but as far as an entry signal goes, you should find those using a different system. So let's go to the British pound US dollar, and what do you know? We actually did have more or less a divergence setup. Like, we're having some divergence actually continuing to set up as of last night when this candle closed. When this candle closed and the neural indicator, the neural strength indicator actually started to move upward, that's when we spotted divergence. Now, it's not super pretty divergence though, because we're still ranging right here on the British pound US dollar. So let's go take a look at the chart. Let me USD. There we go. See, we're still ranging here. Yes, we're moving downward, but we still haven't broken past these, or this last time that we were ranging right here. This sideways movement that we had. We haven't broken down past that yet, and I'd like to see us actually either break down past this to consider this a breakdown of divergence, or I'd like to see us turn around just a little bit and create an actual trough, because we've created several troughs on the neural strength indicator. As you can see, we've got 1, 2, 3, 4 troughs already. I mean, and then the initial one, which was here. After this trough was made, the market started ranging, where it hasn't really moved a whole lot, in the past couple of weeks. But the neural strength indicator has been going up. And it started to go down just a little bit across these past 3 troughs. But overall, this is the one that I'm looking at, because this is the bigger one that we saw. And we had this trough over here, which was just barely below this trough. So technically the market's been going down, but the neural strength indicator has been going up, and we actually even breached 0. We went above 0 a couple of times now. And we're just waiting for the market to also make a trough, and then we can start, I don't know, considering this actual for reals divergence. Now, if you want to use a different type of system, a different type of trading system for finding an entry for this, if you already consider this divergence, which, I kind of already do. I look at this as being divergent already. I'm just not ready to enter this trade yet until we have either broken down below some of these previous resistance levels or support levels. They were resistance at one point, then they were support, then they were resistance, now they're support again. If we can break down through those, then I'll consider this a potential breakdown of divergence. Or alternatively, if we turn back around and we can break above these highs, which are now resistance, they were support before and now they're resistance. If we can break above this resistance level, then we might be looking at a better trade. But if we do that, then we've already created our last trough anyways. And then we can consider this full divergence, and once we break above these highs, we can buy it for a little while. We can buy it maybe just up to these resistance levels, which doesn't look like much. 36.08 up to 37.36. That's 124 pips. Yeah, 124 pips. That's pretty cool. I'd say 124 pips is worth waiting for. I don't want to get into this buy trade and then have divergence break down, because it is not a 100% system. And again, it's not a standalone system. It should be used in conjunction with other things. So now let's take a look at the New Zealand dollar, US dollar. And we can see that this one is a little bit, well, it's setting up for divergence is what it's doing. What I really like is that it's actually following the same pattern as the British pound US dollar, which is good because they're both based on the US dollar, or the quote pair for each is the US dollar. So if we take a look at this, we see that we were going down in price, but we were going up on this neural strength indicator. This very lowest bar here, which is the lowest low that we've seen for quite some time, is not lower than this low. I mean, this isn't a low anymore, but it's low on the neural strength indicator. So we're actually moving downward with the New Zealand dollar, US dollar, but we are moving up on the neural strength indicator. And in fact, we have breached 0. We've gone above 0 on the neural strength indicator, showing that, gosh, we may be trending upward pretty soon. Our neural index has been green for several days. And now we're seeing this nice little crossover thing happening right here. We are dead set on possibly having a nice buy trade on the New Zealand dollar US dollar. And before I go too much further, let me actually take a look at the New Zealand dollar US dollar so I don't put my foot in my mouth. Where is a New Zealand dollar US dollar? I guess I don't have it on there, so let's just type it in. There we go. Look at that. We stalled out right down here at these previous support levels, and we may end up seeing quite a bit of market movement downward still, because we've done this before, right? We went down, we went up, we went down, we went up. We're still technically ranging ever since, wow, June of July 4th, 2016. Wow. We're not trending in any type of way, shape, or form. We're just sticking around in this little channel. But we are starting to see a lot more movement than we saw previously. And this actually makes me a little bit disappointed because back in early January, I actually was placing sell trades going upward. I placed a sell trade down here. I placed a sell trade here. I placed a sell trade here. I placed a sell trade here. And then I placed a sell trade up here in this area toward the end of January. And then in February, I finally just closed out all of those trades because this first one, or this one up here, was in just a little bit of a gain. We made just a little bit of profit, and so I just abandoned all of those after the handyman robot made enough money just to close them all out. Gosh, I wish I would have stayed in those. Look at that. It went all the way back down to where the first trade I placed would have made profit. That's so cool. I guess I actually had some decent enough analysis going on that one. Anyways, let's go ahead and move on to the Euro US dollar. I always like to look at the Euro US dollar just because. Let's go the Euro US dollar. And there we go. Now, you may not consider this divergence, although, you know, technically it is. We're looking at this low, or this bearish candle here corresponded with this low on the neural strength indicator. And the neural strength indicator has been going up ever since then. All of these troughs are higher than this one. And now we finally made this huge lower trough, and now we've breached back above zero again. And ever since the beginning of this move, and that's what we're looking at really. We're looking at the beginning of this move where we finally broke down below all of these previous support levels. We broke down below it right here. At the same time, the neural strength indicator came down lower than it's been in a long time. But now, even though the market is trending downward, the neural strength indicator is trending upward. And we finally have turned green on the neural index, and we're above zero. And this trough ended up being higher than this trough. So we're looking at a pretty decent bullish move, wow. Bullish move coming up on the Euro US dollar. Now, once again, you can't use divergence as a one-off method for determining entry points and exit points and all that stuff. You have to use divergence as a filter, or as a beginning, a foundation of a system. So we spot divergence, and now we want to wait until, etc., before we actually place a trade in the direction of that divergence. Now, we're actually seeing considerable amount of divergence with this directional bias indicator as well. We've got this huge, massive low down here. And we've gone lower in price, but we actually went up in the directional bias indicator. We haven't broken above zero yet, so maybe this is what we're waiting for. We're waiting for the directional bias indicator to cross above zero, and then we can consider placing a buy trade on the Euro US dollar. And that's probably going to be the best way that we end up making this particular trade work. And for that matter, if we go back to the British pound US dollar, same thing. I'll probably end up waiting until we cross above zero on the British pound US dollar directional bias indicator, and then placing a trade there too. And for that matter, oh, we just crossed above zero on the New Zealand dollar US dollar. So that may have actually been a pretty decent buy trade as well. All right, let's see here. I think we have... Oh, we have someone saying hello. Finally, man. I wish more people would comment during these live broadcasts because it really makes things more interesting when we have people interacting with us, communicating with us, and all that cool stuff. So let me turn the volume all the way off on that thing. Rodrigo, hey! Rodrigo says he's finally able to attend one of these, and it is so fantastic to have you here. Okay. Thank you for communicating with us, Rodrigo. Anyone else who wants to chat, you're more than welcome to do so during any of these live broadcasts. I appreciate all of you being here, and I hate to end right after the first person actually chats with us, but that's pretty much all that I've got for the day. We are going to be coming back, however, tonight during... Let me get my desk cam back up here. Okay, so tonight we're going to be having a robot block party, which, I don't know, the term was actually used by a member of the robot continuum. As I said, that we have a bunch of updates with robots and all this cool stuff coming up, and he said, oh, we should have a party. And I was thinking, whoa, we should have a party. So anyways, we're having this robot block party. Oh, we had another one. Oh, Rodrigo, you're waiting for the New Zealand dollar, US dollar to cross the weekly pivot. I'm sorry. I'll get back to this robot block party here in just a moment. First, let's talk about the weekly pivot. Let me bring up the weekly pivot up here. Indicators. I bet there's a pivot point indicator built into TradingView. Pivot points, standard. Whoa, that is a lot of pivot points. Let me make this a little bit better. Number of pivots back, 15, sure. Pivots time frame, weekly, that's cool. And the style, I'm going to remove the support and resistance levels for these, just to make this look a little bit cleaner. And since it's a weekly pivot, I don't know why, I just got stuck in the habit of making those green. So we're going to make them green, and okay. Let me make sure I'm understanding this correctly, Rodrigo, because oh, we're waiting to cross our previous weekly pivot. That's what it is. Okay. Or are you waiting for it to touch the weekly pivot? I don't know. Let me just go back and check really quick, because Rodrigo made the comment, and I want to answer it because he's the only one who's talking to me right now in this thing. I like the New Zealand dollar, US dollar buy, but waiting to cross the weekly pivot. It is touching it, but doesn't seem committed yet. That's true. All right. So we're waiting to cross this weekly pivot that we're on right now. So to come down below and just sit on it, I guess. And he's on the 4-hour time frame. So let me go ahead and go back to a 4-hour time frame. Well, that is just slick. So the 4-hour, we're waiting to cross above it on the 4-hour chart, which, gosh, that should be happening relatively soon. If we cross above it and we close above it, then that's probably a pretty good signal to go ahead and buy it. And you know what? I'm just crazy enough to do it anyways. Let me bring up the buy. Well, I'll just create a new order. Market order. We want the take profit. What did I talk about before? You know what? We'll make the take profit 69.66. That's only a... Let me go back to the daily chart and figure that part out. Let's go back to the daily chart. Whoa. Turn that back on auto. There we go. Zoom in. All right. Now, buying this... Well, shoot. We're looking to go up to these... this last little hesitation that we had here for right now. Oh, wait, you know what? I have a good indicator to do this. Let me bring up that indicator that Gordon and I built last week. We want this to be the... What is that thing? It's called the ATR? Yeah, there we go. Oh yeah, look at that. I'm going to put my profit target right here at the top of this nice, I don't know, peak that the ATR. This isn't actually the ATR. In fact, it's not based on the ATR at all. It's based on several other things that have nothing to do with the ATR. I just called it ATR because it was the closest thing I could think of to what it is. So I'm going to pick this peak right here as my profit target, 69.87. And so if I go ahead and buy this thing, I'm also going to check. That's where I want to close above it, and next bar to start above it. Maybe being overly cautious, just took a huge loss on Australian dollar, Japanese yen. Yeah. Just to note again, I'm on the 4. Yeah. Okay. Yeah, I understand being cautious. I threw caution to the wind most of the time, which is not a good thing to do, but I do it anyways. So let's take profit of 60. I want the buy trade. There we go. 69. And that was 69. We'll say 85, just so we're just below it. And a stop loss. Definitely want a stop loss on this trade. 67. Oh, that's a big stop loss. You know what, though? I'm going to use it. I'm going to use it as my stop loss. Well, when do we know that this has failed? I'm going to say that we know this has failed if we cross back below this and if we break down below these particular prices, because I don't want to use that huge of a stop loss. So let's do 68.50. 68.40? Let's do 68.40. Stop loss price 68.40. I realize that we're risking 80 pips to get 65 pips, but I'm just going to do it anyways. I'm going to go ahead and buy this. There we go. Sweet. That's going to take a few days to close, so I'm just going to leave it there. Well, potentially a few days to close. Oh, wait. Man, I made this a really tiny... I need to modify this thing. I'm just going to close this out. Because that is a dumb trade. What is that? Yeah, that's one. Close this position. Oh, look. My Canadian dollar Japanese yen trade is doing well. I'll go ahead and close that one out too. Maybe. Okay, there it goes. All right, cool. I only did one contract on this trade. That was pretty dumb. So let's go back down here, and we want create new order. And of course, we want something more like one mini lot, because that's just usually what I use. Want to buy, take profit at 69.85. Those things what we came up with. Yeah, 69.85. And a stop loss of 68.40. All right, you saw it here first, folks, which could very well turn out to be a very terrible trade, because I'm trading based on my indicator here and also on the pivot point that we just crossed above, and also trading up to this. I like this trade. I like it. We'll see how it goes. I'll let everyone know how it goes whenever it goes wherever it's going. Yes, that was a whole lot of goes and going all in the same time. I will be sending out an email about how to access some of these indicators, because they're all available to the Trader Continuum and Robot Continuum. The Robot will also be made available for the Robot Continuum, the one that we talked about at the beginning of this presentation. And also tonight we have the robot block party, and we already talked about that briefly, but if you want to come to that, we'll be talking about all the robots, plus good settings for the robots, some new robots, and some upcoming robots, just all kinds of robot stuff. Robot block party tonight. That webinar is free to attend, but if you want the robots themselves as part of the robot continuum, and that's not for sale at the moment. So, but come to the robot block party so we can talk about a bunch of the robots, and you'll even get some cool free stuff while you're there. And anyways, that's all for today. Actually, you know what? I'm sorry. One last thing, because this is part of the robot block party. I made a spreadsheet. Look at this. It's a big giant spreadsheet that has all of the robots that we've had so far, descriptions of those robots, ideal market conditions for trading those robots, and the profit potential, drawdown potential, loss potential, reliability, minimum account size, best pairs, back-tested years, live traded years. I made this entire spreadsheet about every robot that I've built. There's like 20, well, every robot that I've built and sold. So there's like 20 robots on this page. And we'll be talking about even more robots, the ones that are coming up. But if you come to the robot block party, you'll get this spreadsheet, regardless of if you have the robot continuum or anything else. So please come, please participate, have a good time. And Rodrigo, thank you so much for participating in the chat. This has been fantastic. Probably one of the best episodes that I've been a part of yet. Now, maybe you don't agree, but I don't know. I had fun. That's all that really matters. Goodbye for now, everybody, and I hope to see you tonight in the robot block party. And, oh yeah, let's fade to black.